We just successfully exited our testing period. Let's take a look at the most important piece of news this week and what it means for next year. Okay, let's talk the end of the testing period. Now, this is probably the last time that we're going to look at this chart. I'm just showing it here to set the scene. My expectation was the market was coming down at the time. I thought we were going to do a test on the 200-day moving average, and I thought we were going to bounce off it strongly like a trampoline. And so we were going to get option 3 of the 3 potentials that could happen as we were approaching our 200-day. And if I were to update you to where we are today, we got almost exactly that. Here's the market coming down over the last 3 months, and then almost as if turning on a dime, we closed below the 200-day moving average, but not enough to generate a confirmation that we were going to break. Then we turned on a dime, we had the best week of the year, and then we followed it up with the best day of the year, and it's been just a rocket ship since. And if you remember from last week, I said, I'd love to see us get above the 4,400 zone on the S&P 500, 440 on the SPY. The reason why I thought that is, there was some congestion here, and I just wanted to see if we could clear that. We cleared it with authority this week. So I'm saying, in my interpretation of things, the testing period is over. We passed, we succeeded, we got option 3, what I was anticipating. So things look really good here. I think this gives us the green light all the way through to the end of the year. And one of the reasons why this week has been so good and so strong is what's happening with CPI. So I think on Wednesday we got CPI, and basically for October, headline CPI came in at 0. Now we've been on a disinflationary trend for pretty much the last 12 months solidly. But earning a 0, a big goose egg, was a tremendous sign to the market that the Fed is winning its fight against inflation, and we're going to start, as we look forward, we're going to start thinking about interest rates coming back down. And it's not just a 1-month phenomenon either. This is the 12-month change, headline CPI in blue, core CPI, which is what the Fed looks at, in maroon here. And basically, we've got 12 solid months of both of these coming down significantly. Headline CPI somewhere a little north of 3%, core CPI coming right in at 4%, but this is a fantastic, strong, durable trend. Not only has inflation dropped a whole bunch, but it's been very consistent all the way through, and I'm going to anticipate that these trends are going to continue forward into the future. And what that means, we talked about this last week, the number one thing that investors need to be doing now, and what I spend my time doing, is preparing for interest rates to come down. I think we're going to get this path for interest rates where here we are up at 5.25 to 5.5 where we are today. And 2 years from now, here we are at 4%. I think it's going to be every bit as steep as this decline in interest rates, if not more so. And this has tremendous implications for the stock market. I think it's got good things for the stock market. For the bond market, it's got really good things for the bond market. And for dividend stocks, I think it's going to be a positive for dividend stocks as well. So all of this is good. The counterbalance is the economy is slowing down. So we need to weigh the benefit from lowering interest rates versus the slowdown in the economy, which is going to be the stronger force. And I think it's still extremely early, so I never give like a 2-year forward projection. But I think eventually the good guys are going to win out in the end there as well. So if we look at the market, things look great. We've exited our testing period. I think we've got the green light till the end of the year. Now, I don't think that this rapid upward movement that we've seen is going to continue. I would not be surprised if the market needs to start digesting this move a little bit, trade sideways a bit. We're not just going to continue a vertical ascent till the end of the year. Positioning was extreme. Everyone was extremely out of the market here at the bottom, and everyone is extremely in the market right now. So I expect us to have some congestion, some filling. But in terms of touching the 200-day, in terms of potentially a strong downtrend in the market, I'm not seeing any signs of it. And I don't think we get that before till the end of the year. So things look good until then, and we want to be thinking about interest rates as we start making our preparations for next year. And there you have it. Nothing but good news for you. Enjoy your weekend. I'll see you on Wednesday.